Markets around the world have welcomed the remarks of Fed Chairman Bernanke, who went out of his way last night to emphasise that easy monetary policy will be with us for some time. Welcome to the News Hub. I'm Michael Casey. So the markets around the world breathed a sigh of relief following Bernanke's statement. Kaitlyn Keirnan joins us with that story and more on the day ahead for investors. Good morning, Kaitlyn.
Good morning.
Now, we should start up and say we've got some breaking news, of course, as we often do at this time on a Thursday. 8:30, we had the jobless claims numbers out. What did we come up with?
360, which is a lot higher than expected. Economists were looking for 335, so about 25,000 more than that. And it is higher from last week as well. That was 343, so not a good week for the first week of the month.
Right, exactly. But we did have those very positive or somewhat positive jobs numbers out last Friday. So the question is this week-to-week volatility going to change that picture? And I suppose jobless claims have been relatively strong all week, as it was very low, which is positive up until now.
It's been sticking around that 350 number. So, you know, this last week, 343, you know, this week, it's still like kind of averaging right around that 350. So
you can see the trend right there. In fact, it looks, as you can see, although ticking a little higher over time, but nonetheless, the 350 number is the one that people say maintains the status quo, I suppose.
Yeah, so I mean, it's the first week of the month. It was a holiday week, so maybe people were getting out there and making their filings.
Right, that could be the case. But of course, it plays into questions about what the Fed's going to do, and that's really on everybody's minds at the moment.
And the Fed has said, just because tapering might begin doesn't mean they're going to step back from their commitment to this easy money policy. So last night, as soon as Bernanke was talking, futures were rising already. So
let's just be clear about what tapering is, because not everybody knows what it means. We're talking about, of course, the winding down of the bond buying program that's been ongoing now since the end of last year. And but it seems to me it's interesting that they go out of their way to say this, and yet nothing's really changed that much. This is exactly what we were told at the end of the FOMC meeting, which of course sent the markets into a complete tiz.
Yeah, at the end of May, early June, the markets really kind of took a blow when people were afraid that the Fed was going to stop pumping as much money into the economy. But recently it's been recovering. In fact, yesterday the Dow finished just 118 points below its record high close. So if today goes well, we might see a new high.
Just shows how fickle investors are. On that note, gold's moving around quite a bit. The first of your things to watch today.
Yes, gold and treasuries on that Fed statement. So gold was about 2.8% higher already this morning. Treasury yields were down at like 2.56 from 2.68 yesterday. So both of those are the Fed statement if the easy money continues. So the concern is kind of leaving those markets.
And what else? What are the stocks we're looking at?
Also, we've got JP Morgan and Wells Fargo. They were both up more than 1% this morning. They report earnings tomorrow. So we had Alcoa earlier this week, but the banks, they got us into this financial crisis. So a lot of eyes are on those bank earnings, which start Friday morning.
Always a big one. And the third one?
Yes, BlackBerry. They had a couple executives leave. So they just seem to have more trouble there. They fired someone a couple of weeks ago, and last night we got news that two of their executives, someone in charge of BBM and social media apps, and then someone else in charge of developing the calendar and contacts on the new BlackBerry 10, they both left the company. So the stock was actually higher this morning on that news. So.
All right, Kaitlyn, thank you so much for your time.
Thank you.